Hi, I'm Steve Ewart, energy columnist at the Calgary Herald. I'm here with my colleague Deb Yedlin. We're going to talk about the issues in the oil patch, and the biggest one this year has been the decline in the price of oil, and now we have OPEC's most anticipated meeting in years. Deb, why are we so interested in these OPEC meetings?
Well, we're interested in OPEC meetings because Canada is a price taker. We have absolutely no interest on the influence on the oil price, and so what happens in the market is we are affected by profoundly. Now, in 2008, OPEC met after the financial crisis. They cut production, and they really, after that, fell off the radar screen in terms of people paying attention to OPEC meetings. For the first time in a long time, everybody's very focused on this meeting because oil prices, as we know, have fallen dramatically since June. The WTI price was below $75 today, and the Brent price has been below $80. And of course, what we're watching here is what that means for energy companies in Canada.
It does. You get the sense that OPEC wants to let the markets do its job. Is that how they traditionally see this, as letting the markets play out here?
Well, it depends on what other political influences they're trying to have with using the price of oil as one of their levers. And I think that's the one thing that we are not really appreciating. There is some political maneuvering going on with Saudi Arabia, whether it's to cause pain within the OPEC cartel and influence political change within other countries in the Middle East, or, as some people suggest, to decrease the amount of oil that's being produced in non-OPEC countries. That has increased the supply significantly. It
does look like we're in a period of lower prices for oil, though. That's certainly going to happen as we go forward.
Yeah, I don't think we're going to see a bounce back anytime soon, and that's why I think what's really interesting to us is what does it mean for what we should expect in Western Canada. What do you think?
I think what we're hearing at this point is the forecasts are we'll have about 10,000 wells next year in Western Canada, about a 10% drop from this year. We're seeing the big producers come out with the capital spending that is higher than next year, but there's a lot of flexibility built into these budgets. I think as the price stays low, if it stays in this range, you're going to see companies really cautious about how they spend. There's been no talk about layoffs at this point, and there certainly was no talk about cutting dividends in the third quarter when results were announced at this point. So at that point, we're not seeing a great deal of fear in the market at this point.
Oh, so you're expecting companies to say, we're going to look at capital expenditure budgets before we look at cutting our dividends. Is that the sort of sense that you're getting in the market?
That's definitely the sense that we're getting. This will be the last thing they do is cut dividend. And they're also, after we saw the problems in the past with cutting staff, so I think there's a real hesitancy for producers and service companies to cut staff. They value those people a lot in this day and age. So we'll see how that plays out. We're definitely dealing with issues of a lower commodity price, so that will impact how people look at the industry.
And of course, the lower commodity price means a lower dollar. That's what we tend to see. And what's interesting in this case is people say, well, lower prices, lower dollar, doesn't that mean that a lower dollar, the energy sector wins on the exchange rate side? And that's true to a certain degree because, of course, your costs are in Canadian dollars, you're selling in US dollars, so you do get an exchange rate win. However, there's only so far that can go. And the other piece that companies are benefiting from, at least right now, is that they've hedged forward.
I expect we'll see the activity stay relatively high through this winter, and the impact should really start to fall out next year when we get into after the winter drilling season. And if we see if prices are still low at that point, then we'll know how this is going to play out much more clearly than we do at this point.
I agree with you. I think that's what we'll start to watch for in the new year.
Thanks, Deb.
Thanks.